All right, it's the trade recap for Friday, March 27th, 2026. Let's go ahead and get into it. This is number 2 of 10 for phase 3 of One and Done, which is basically just an exercise to help improve consistency, identify issues, and kind of sort things out. So the rules of this are, if you're new here, or the series is basically you're only allowed to take one trade, with the caveat if that trade happens to be red and a reset trade has been planned for, that one is allowed to help recover that loss potentially. Other than that, we are using a size of 3 to 5 contracts, given the, again, depending on the conditions of the market, maybe less. It will never be more. And yeah, that's kind of how that goes. So kind of another interesting day in the market in terms of what we've been doing. We had another gap down, so we had to kind of exercise some caution because it was a decent size gap down, and kind of see what levels came into play. Again, how much caution needed to be advised or followed. I'm trying to think what else. Again, things like when we gap down, sometimes premium can get a little wacky too in terms of being really expensive. So that was something else, as well as our risk levels, given the historic support and resistance levels we're kind of getting into and how wide they might be. So if you're wondering how to trade or figure all this out, especially if you're new or you're struggling, you need a coach. Pure, plain, simple, you need a coach. You can really try and do this on your own, but you're probably going to get steamrolled, blow up a lot of accounts, and eventually quit. So if you're really serious about trying to make this a career and trade on a professional level, the person you need to be learning from is Pat Mitchell, and he runs a service over at tricktrades.com. He's been in the markets for over a decade. He knows exactly what he is doing. He proves it day in, day out, live on screen share every single morning. I mean, it's a little scary at times when he can predict things months out because of just his mindset, the strategy, how he reads and, again, dissects price action charts, both the daily charts and the 1 minute charts. It's really a thing to witness. And that is who I learned from. He had developed a program called SizeUp, which helps new and struggling day traders really step by step, incrementally build up their skills, their experience, and their accounts to reach the level of being a professional trader. So if you want a sampling of the information he puts out, he does have a YouTube channel as well. You'll find over 1,700 videos on there. It is a massive wealth of knowledge, but good luck trying to put all the pieces together by scrolling through all those videos. That will take you a significant amount of time and effort. And the shortcut to that is simply just joining the service. And it is an education service. It is not an alert service. You are here to learn how to do this in a professional manner, not shadow someone else's trades that figured this out and, again, decided to share that with the rest of the world. So with that being said, let's go ahead and get into the charts. Let's see here, pull up the recording real quick. All right. This is a recording of the trading session from this morning. Kind of get things laid out for you here. Let's see here. Okay. So we only trade SPY and Qs. That's it. We don't trade any other stock, ticker, whatever. On the top here this is SPY. SPY's charts in order execution, and this is Q's charts in order execution here on the bottom. These left charts here are our daily charts, so 1 day candles. The charts in the middle are the 1 minute intraday charts, and then I keep my order execution here on the right. That is just how I like it laid out. Other people have it differently. These blue levels you see here, these are the levels that Pat finds starting the night before and refining the morning of a trade session. And these are the levels we trade. Once he finds them, he develops a trade plan around them and tells us exactly how to approach each one of these levels. These risk lines you see on here is something I like to add on there because I like, again, helps you track where my risk is. One, again, big thing about these blue levels though, once they are set, they do not move. They do not get adjusted for any way, again, for no reason, because if you're doing that, then you're really not developing a trade plan. So I'm going to go ahead and get us rolling on this one. We're about a minute and a half from the open, so I'll speed this forward. As you can kind of see, we're kind of opening between these two levels on Qs, and between those two levels on SPY, it's a bit of a gap down, and the range is a bit wide. So it's something we have to watch for. A little too far. All right, so here comes the open. Kind of see what we have to do. And again, the theme of the day, again, just like it has been for prior days, patience. Gotta wait for levels. So that's exactly what we ended up doing. So kind of just step you through this just so you can kind of see how it all kind of unfolds, and then kind of seeing where we go. So boom, hit SPY right there as it was coming into the level. Now, the thing you gotta be careful of, Q still has a long ways to go, but it is coming into the pre-market low. So that is why I elected to start in there, knowing that if it comes lower, I will have to add and correct that average. All right, see what kind of reaction we get. And that's part of this is patience. Again, keep slamming size, and especially again when you're trying to build that starter position up. Just kind of see what it's doing. It is reacting to that level. See if we get any follow through. Qs didn't quite come down to that pre-market low, so maybe it'll come down more. So I'm gonna go ahead and get zoomed in on SPY because that's the trade that I'm actively in. So I like to just keep a little bit closer eye on it. Starts coming down. Now it's coming actually into the level itself, comes through it a little bit. Going to go ahead and add right there. And that's kind of, might call it a tweak that needs to happen. Is I only added one, where adding two may have been better. I mean, it's hard right now considering the conditions of the market. Things were maybe just a little pricier on the premium side. So do you want to put in that amount of size to correct? Or do you want to save that add for potentially a little bit lower should you need it to really help correct that average, depending on where it's going to go? Because as you can see, while SPY is at that level, Qs are starting to get below the pre-market level. So it's one of those things, whereas if it comes down into that lower level on Qs, it should drag SPY even lower. So as you can see, continuing to work its way down. And we start to come back up, kind of bumps into that level, rejects it, works a little bit lower, puts in some kind of base, starts getting bought up, and then it's like, okay, so reacting decently. Qs is kind of coming up into the pre-market low level too, so we might reject again here. Comes through it on both. So we'll go ahead and see kind of, if we get one more little pop, getting ready to basically carve one off. It's kind of just over it, so see if it puts in that remount of that level and pushes. Which it's looking like we're going to get that. So, okay, that's good sign right there. And just let it sort itself out a little bit, trying to be patient. And this is where averaging, again, I would have paid myself probably a little earlier than I did on this initial one, simply because of where my average was, especially for that first sell. So as you can see, it's kind of just messing around. It's trying to decide what it really wants to do. But it's looking so far decent. All right, there goes the pop, and I'm going to sell into that one, holding one to see what kind of follow through we get. Now it's coming back to test the level again. Kind of seemed a little wicky there, so it's one of those things where just kind of be cautious. Also look at the volume on SPY. It's fairly consistent across the board. So getting ready to peel off the second one. If we get, again, one more pop, may not get it. And then it's like, okay, maybe that was it. Missed it. Now coming down this level, if we, again, potential add opportunity there, I did not take that. Again, another tweak. Probably should have. honestly, in hindsight. Again, throw on Q's kind of where that level was, and as you can see, Q's has basically coming down to test its level at the same time, so it's looking decent there. Same things, keeps getting bought up at that level on SPY. Q's is kind of in the area, again, getting that reaction. Now we're starting to move back up. So there's an add and then strip it out on the pops back into the kind of where that risk level is, because that is a technical-ish level. And then sold the second as we popped through it. And that was the trade for me. So you're gonna see me snap a screenshot right there real quick. And then again, just to see how this ultimately plays out, kind of reset the charts so they auto adjust. You see, again, SPY continuing to kind of just work its way up. Pulls back. Again, I was going to kind of test that resistance level or that risk level that I'd marked out, because that's a technical-ish level. But again, ultimately breaks through it, comes back down. And yeah, so again, go into the chart itself. So here's my entry chart, and I just marked out the quantities there. So kind of the interesting thing is, though, if I had done this a little cleaner in terms of where I entering was fine, that first initial correction could have done 2, which would have really helped the average. And then if I wanted to get full size in, I could have added the other 2 to reach 5 as we were coming down into the risk level. Would have liked it a little bit closer, but again, sometimes that just doesn't happen. It is what it is, which really would have helped pull the average, and then really would have peeled out as we came back up in this run. Again, it's one of those things where, again, there was a opportunity and a good one to add on this one, pulled back clean, rounded, and then pushed back up. Squeezed a little bit, kind of came up into this pre-market high range right before the open, and ultimately bailed. So as you can see, Q's didn't really test this level until later. So it's one of those things where nothing really triggered off of Q's for the morning session. But SPY worked beautifully. Again, that's relatively clean price action. A little wicky in here. Again, like it was digesting something. But still, again, good day. So a little tweaking on my end in terms of adding, averaging, still working that out. Feel actually pretty decent about the where I entered. So cleaning that up a little bit definitely has helped. But it's something that still need a lot of practice on. And yeah, all in all, good day. Emotions were good, stuff like that. Other than the issues that I've identified, I really can't say there was much else beyond that. So pretty good there. So in terms of like how did ultimately like the day go from here, as you can see, not much. Again, Q's came down to this level right here, and again reacted. So then there was a trade there a little later than we generally trade. SPY ultimately broke down below this level, came back up, bumped into it, and then failed again. Came out to it, pulled back, came up, tried to get over again, and failed again. Popped back through, immediately pulled back. So that's interesting. And then finally came through, and then it's just continuing to break down. So again, this is all stuff Pat has pointed out, and he actually pointed out like we're probably heading in this direction with a high degree of like certainty. He was talking about this like 6 to 8 weeks ago. So it goes to show like knows what the hell he's talking about. So it's one of those things where, again, you're newer, struggling with day trading, and you need a coach. He is the one you want to look or learn from. So go over to tricktrades.com, check him out. Best piece of advice I could give you. If you're really genuinely interested in the service, there's a couple links down in the description below. It'll save you a little bit of money on your first month. Give it a shot. If it doesn't jive with you and what you're trying to accomplish, which would be shocking, again, it's 1 month. Probably pretty small price to pay compared to some of your losses you've taken in the stock market. So food for thought. But all in all, good day on my end. So we will continue this next week. Happy Friday, all. And yeah, enjoy your weekends. Enjoy the downtime. And we will see you next week for number 3. Have a good one.